Brazil's trade pivot, how tariffs sparked a global sales boom, but at what cost? When the U.S. slapped steep tariffs on Brazilian goods, many feared a trade disaster. Yet Brazil didn't just survive, it thrived by cleverly rerouting exports to new markets. But here's the twist. While some industries soared, others are still struggling, and China's growing dominance raises red flags. Let's unpack the data. The big shift from U.S. to the world in August and September 2025. Brazil faced a $375.5 million drop in exports to the U.S. for 9 key products hit by tariffs. But here's where it gets surprising. Sales to other countries jumped by $1.25 billion in the same period, more than offsetting the loss. How? By pivoting to Europe, Asia, and even Mexico, which some suspect might be a backdoor to the U.S. market. Standout winners. Coffee. Exports to Germany, the Netherlands, and Japan surged, with prices rising globally. U.S. sales fell 11.3%, but global revenue climbed $155.3 million. Beef. China and the Philippines devoured Brazil's supply. Shipments to Mexico skyrocketed 292.6%, though some speculate this could be a workaround to bypass U.S. tariffs. The controversial catch. China's expanding grip. While diversification sounds like a win, Brazil's reliance on China is deepening, especially for beef. China's share of Brazilian beef exports leaped from 58.8% to 67.2%, raising concerns about overdependence. Is Brazil trading one risky dependency for another? Critics argue this leaves the economy vulnerable to Chinese demand shifts. The hardest hits. Not all products bounced back. Steel and iron exports to the U.S. plunged 19.4%, $86.7 million loss, and global gains only recouped $31.5 million. Similarly, diesel engine parts and specialty woods saw declines across the board. The silver linings and oddities. Some tariffed goods still grew in the U.S., like truck tires, plus 417.3%, and bulldozers, plus 707%. Economists suggest this could be due to supply chain ties, Brazilian manufacturers feeding U.S. companies, tariff loopholes, creative product classifications to skirt restrictions. The big question, is this sustainable? Brazil's agility is impressive, but the long-term strategy is murky. The U.S. is no longer a reliable partner, warns economist Rafael Cagnan. Yet betting heavily on China carries its own risks. And what about Europe and South America? Could they be the next frontiers? What do you think? Is Brazil's pivot a masterstroke or a temporary fix? Should the country prioritize market diversification over deepening ties with China? Could Mexico's boom in Brazilian imports hint at tariff evasion? Drop your thoughts below. Let's debate the future of global trade.